We see stocks up for the day along with bonds. Gold down just a little bit. Let's jump into the charts. We always start with the S&P 500 and always start on the weekly chart, which is how you should do your analysis. Always start with the largest chart. That's the weekly. Then work your way to the intermediate, which is the 2-day, and then the 4-hour. Now, those of you who want to experiment with other time frames, feel free, but I do encourage you to always start with the bigger chart so you can see the biggest trend. Then you can see the smaller waves, because remember, price movement moves in waves. That's the way to look at it. If you're a surfer like I am, you can relate to that. So let's look at what's going on. We're going to our second week of strong up movement. We do see that the price is now pushing right on the weekly trend line. We're still a ways from crossing over unless it was a boom day on Friday. You're not going to have a weekly vertical crossover. I've had some people ask me, when are we going to let you know about weekly vertical crossovers? You've not received a text message in a while. We have a free texting service. You can see in the show notes how to sign up for it. Well, the reason is because it's been a long time on the S&P 500. The last time we had a weekly vertical crossover was back in October of 2018. So again, that was for a down move. Will this result in an up move, this latest up movement? Maybe it will, maybe it won't. Hasn't happened yet. We could see things roll back over, but we do see the derivative oscillator losing downward momentum, price percent oscillator heading up. Second week, even stronger up movement so far. Green open box candle with a wick on top. Let's go from the weekly to the 2-day, and you can see again, stronger movement. Actually, 2-day ended pushing through the weekly trend line. Derivative oscillator gaining upward momentum, price percent oscillator heading up. And we go from the 2-day to the 4-hour. This is our real trigger chart. This gets us into and out of moves many times. So what do we see going on here? Well, we have seen for many days now the red signal line and the blue price percent oscillator, which is our main indicator, they've just been running parallel to each other. We see the derivative oscillator gaining upward momentum, price percent oscillator still ticking up with the red signal line. So again, things just are continuing to move up. At the end of the day, the 4-hour chart pushed through the weekly trend line. So all those different little things happening, pushing through trend lines, continuing to move up, all of that are different things that we pay attention to. And the more you practice trade, the more you follow the charts every day like we encourage you to do, and particularly set charts. The reason people say, well, why do you follow the S&P 500, the NASDAQ 100, gold, and 20-year bonds? So you sort of get a broad range. You get a commodity like gold, you get a bond fund, and then you get the NASDAQ 100, and you get the big S&P 500. So it gives you sort of a broad swath. Now, can you use the information that we train here to actually, can you use that information on just individual stocks? By all means. But there are a lot of other rules. Remember, stocks are going to be much more influenced by things that happen related to that stock, related to that sector. If there's a crash of an airplane and the CEO dies, might take a hit. If something particularly comes out, a business report that might affect that sector, that industry, or in fact that company, might take a hit. Earnings is something to pay attention to. Warnings are something to pay attention to. There's a lot more. The reason we keep it simple and we stay with index funds is because you can trade those just like stocks, and you can practice a whole lot easier. And again, I just find it more simple, and it can be just as good and just as profitable, and we want you to practice trade this stuff. We're not a stock calling service, we're an education firm. That's where we are as we finish up Thursday and go into Friday on the S&P. Now let's go to Q. Start on the weekly chart. Up 0.79%. Again, green up candle. Derivative oscillators getting close to going green. Maybe that'll happen by the end of the week. But the real thing, the price percent oscillator, doesn't look like it's probably going to cross over at the end of the week unless it's a boom day on Friday. Green up candle, wick on top. Go to the 2-day chart. That's a nice size candle. Not as big as the one that caused the 2-day crossover back on the 2-day candle ending Wednesday the 9th. But again, a nice up candle. Derivative oscillator gaining upward momentum, price percent oscillator heading up. We go to the 4-hour chart. What do we see? Looks very similar to the S&P, continuing to sort of parallel and track along, moving a little bit away at the end of the day, down a little in the morning, up in the afternoon. But again, price continuing to move up, pushed through many days ago on that weekly trend line. So again, just continue to watch the cues. We'll see what happens. And we don't have a trade right now. Why? Because the 2 days moving in one direction, the weekly another, that automatically rules out a trade. We are trend followers, so we have to have set trends with both the intermediate and the long-term trend. That's the 2-day and the weekly respectively. So we leave the 4-hour chart, we leave stocks, we go to bonds on the weekly, and we have a stronger down, the first down candle we have seen in many, many weeks. Red closed box with a wick on the bottom. That's the strong down candle. We had a warning candle with a red open box the prior week, had a long wick on top, little wick on the bottom. That gave us a warning as to what was occurring, pushing through the weekly trend line. Well, this week so far, 4 days into a 5-day candle, we see things moving down decidedly. Price percent oscillator's lost a lot of its momentum. Derivative oscillator heading down, still in the positive, but losing upward momentum. We go from the weekly to the 2-day, and of course 8 days now of pretty strong down movement on that 2-day chart. 2-day vertical crossover happened back on the candle ending Wednesday the 15th, so a couple of days ago. Of course, price has since pushed through the 2-day, and we can go ahead, it's not too early. We can go ahead and redraw our 2-day trend line and go ahead and show that as it moves in the opposite direction of the weekly. And derivative oscillator gaining downward momentum, price percent oscillator heading down. We go to the 4-hour chart. What do we see there? Derivative oscillators losing downward momentum. We saw up movement in the afternoon on Wednesday, some up movement in the morning on Thursday, and then things pairing off a little bit. But what we had happen in the afternoon, it ended the day at 0.02% up, so just barely. So again, could be bottoming out on bonds. The low point so far was back on the morning of the 16th. Things have really just been sliding sideways because even with that down move in the morning over the last day and a half, we haven't pushed higher than where things started going down. So again, we'll just wait, watch and see. Don't have a trade on the on bonds because the weekly is still in a confirmed up move. 2 days in a down move, we are monitoring right now. So now we go to our last, and this is commodity. This is gold. And of course, we love gold. Gold has been in a confirmed up move, gosh, all the way back to the 5th of October. And for the last few weeks going up, we're really seeing a slowdown though. If you look closely, you can see where the wick topped out in the prior week. And so far this week, we're just barely touched on that. And again, you want to continue to see building and growing. You can sort of see where things even 2 weeks back, the week ending the 4th of January, things sort of topping out there. So gold's really been sideways sliding. Derivative oscillator still gaining some upward momentum. Price percent oscillator still heading up. See a little more of this as we look at the 2-day. That's where you sort of see the oscillators losing momentum. The derivative oscillator topped out back on the 3rd of January. And we see the price percent oscillator's been heading down since it topped out on the 9th of January. Even though price movements moved up, it hasn't approached where it topped out, or it hasn't closed where it topped out all the way back on the 3rd of January. So again, we see the oscillators losing momentum, means price movement is slowing down. And then we go to the 4-hour chart, and this is where you can also see it happening. And again, the charts go from the bigger picture to the smaller, big, intermediate, small. And what you see is, you can see on the 4-hour chart how there's just been a sideways slide. Derivative oscillator still negative, actually gained some negative downward momentum in the afternoon. And the price percent oscillator, our main indicator, heading down pretty, just continuing to track down. So don't have any trade in gold at this point, but we continue to be hopeful. If gold turns around and starts moving up, we're still poised to jump into that because the 2-day and the weekly are both in confirmed up moves. So do continue, as we've been saying for many days, keep your eye on the 4-hour chart. We're not giving up on gold, but you can see how volatility, as the Bollinger Bands get closer and closer together, you can see how volatility has reduced. It's sort of just been moving in a set mild range, getting milder as we move along. That's why we use the Bollinger Bands, because they really give us a quick glance at volatility, and it's reduced significantly. So who knows where gold's going to go? Maybe it's going to gain some energy and start popping up. If it does, we still have an opportunity to jump into that. Folks, that's where we are as we end the day on Thursday. Go into Friday, the 18th. We so appreciate you being with us. Don't forget, at the end of the day on Fridays, we always record our comprehensive review and forecast. That's where we look at what happened over the past week and what might be happening over the coming week. You can find in the show notes our weekly our weekly review that we have available. In fact, it is our weekly market worksheet, and it allows you to do a weekly review in writing. I encourage you to print those out. Daily market worksheets are also available. Trade worksheets, a must if you're doing practice trades. If you want to supercharge your training, this is how you do it. We have all that available for free. We also have bound copies, 3 months at a pop, that you can order from us, and also you can buy our book, Charting Your Way to Wealth. If you would like any of that material, you can see links in the show notes on how to buy the Trader's Journal, which is where all those worksheets are. You can also buy our book, Charting Your Way to Wealth. We're in the 8th printing, and we appreciate all the orders. And if you really want to show appreciation for us, and we have a lot of goodies that we give out there, become a Patreon. You can go to our Patreon account and become a sponsor of what we do for free for you. And of course, depending on your level, you can get a free book. You can get free Trader's Journals, actually a year's supply. So again, look at that if you can help us out. We would so appreciate it. It is not inexpensive putting all this on for you every day, as we have done for years now. And we so appreciate you. Love to hear from you. You can write us cw@chartingwealth.com. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.